This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, and with us we have Surabhi joining us today, and of course Nigel as well. Morning, guys.
Hi guys. Good morning. Prashant, is that a cue? Look at the shirt, look at the tie. I don't know if that's the cue today.
I don't think so.
Well, but yesterday's market was a little on the downside, It was a little worrying towards the end of it. But let's see whether or not the bulls have enough to fight back a little bit from around these levels.
There is a certain level of nervousness in the market now, which has certainly creeped in, and that is especially true in the broader markets. And we saw that last week. For example, last week the Nifty, and it was 4 days worth of week, right? The Nifty was down nothing, but the small cap index lost 3%. The small cap index lost another 2% yesterday. So that's what I'm talking about, just to pick up from where we left off yesterday. And we've been making this point for the last 4, 5, actually more, that broader markets are deflating. And now it is visible. I was making this sort of comparison with a sort of ball leaking air, and no one noticing. It's kind of slowly coming off, but it's not slowly coming off now. In many parts, there are air pockets where suddenly stocks can be down 10, 15, 20%, just like that. And it's visible now. I mean, actually, all of it is now cumulatively adding up to the small cap index being down 8% from the recent highs. That's not small. And compare this to the Nifty. The Nifty, by the way, made a new all-time high only last Thursday. And we are down about 0.75%, whatever, 1%, under 1% from the all-time high on the Nifty, 8% for the small cap index. So, most certainly, it was going unnoticed, and there was a bit of distribution which was happening. But I think it is now, pretty visible and out there in that sense, what's going on in the broader space. Now, watch for the Nifty PSE index as well. I mean, when I say the public sector indices, there's the CPSE index, there is the PSE index, there's the PSU banks, and it's early, and we'll have to kind of watch this. But there is a bit of a negative divergence which is starting to emerge there as well. So be watchful. The PSU bank and the entire PSU bank index were some of the top losers in trade yesterday. Here also, I mean, it's such a large space. The liquid, large, well-owned ones, I'm sure, will find supports as and when there is some selling which starts to emerge. But at the periphery, stocks have gone up 100, 200%. And there, I mean, there may be a lot more room to fall. U.S. markets, just to kind of rewind the clock back to last night, they were absolutely quiet. There is a big macro catalyst which perhaps markets are waiting for. That is the U.S. CPI. So last week, we got the labor market data. There was a fair bit of fire and debate around that, whether that is dovish, whether that is not dovish. But finally, the interpretation from a market price action perspective was that it is soft, despite the strong headline number. I think the CPI today is going to be important. U.S. markets, as I said, quiet. Nasdaq was down about 0.4%. By the way, yesterday we put this out that as of last Thursday's close, on the US as well, there is a bit of a negative divergence which has happened at trend highs. Usually it is negative. It indicates a 4-5% kind of pullback. The problem is nothing has worked, right, over the last 1 year. Small pullbacks. US, of course, has had no real correction of note. So is this it? I think we'll find out. The 10-year was up about 2 basis points at about 4.1%. There is, as I said, substantial attention to the February CPI. Remember, Jan CPI was strong. That came in 0.39% plus on a month-on-month basis. Expectations are in the month of Feb, the data we'll get today, that number will be 0.3%. And that will kind of confirm or refute the theme that there is inflationary pressures in the economy, in the US economy, which are persistent, and the Fed perhaps needs to be on hold for longer. I'll just put out supports here. I mean, on the upside, the highs are there, and we know what the market can do. But the Nifty, for the Nifty on the downside, in terms of supports, it should not break the recent low of 22,224. That is the first level. We left off, I think, about 100 points away from there yesterday. The 20-day then comes in below that, which is 22,168. So that's about 150 points or so out from that at yesterday's level. The Nifty bank supports come in at 46,819. That is the 20-day moving average. Again, pretty much close by, about 1.5%, 2% away. And then the 40-day exponential moving average comes in at about 46,650 as well. So, these are levels. The GIFT Nifty is indicating a flattish kind of a start, about a 30-odd point change is what that is indicating. Surabhi.
Prashant, caution? What caution? 72,000 on the Bitcoin. Ether is at 4,000. And apparently the open interest in Bitcoin is at the all-time high. What caution are we talking about? But it's a little scary. We've all seen this playbook before, right? I won't talk more. But beyond everything that we're discussing, I think what is going on in the crypto markets. By the way, UK yesterday approved ETF products on crypto, not just ETF products. They're talking about exchange-traded notes where there's more leverage involved, things like that. But that's a different market. For us here, to talk about some of the key cues today, we're going to be looking at the inflation numbers in a lot of detail, both in India and the US. So that's going to be a key talk point for the overall market. Just to get the numbers going, what the expectations are. For us here, CPI, Feb CPI, the growth is supposed to be around 5%, which is very similar to the rate we saw in January. Consumer inflation was at 5.1%. For the US, that rate is expected to be 3.1%. That's the Feb consumer inflation in the US, which the market will watch out for today. Let's quickly run over the FII, DI numbers. Again, we've got big numbers, but have to realize that all of this is happening at a time when there are large blocks going on. Yesterday, 6% was just the Indigo block alone. Leave aside all the others. So the numbers, just to put them on the board, buying of about 3,200 crores from domestic institutions, buying of over 4,200 crores from foreign institutions, but a lot of block action is also sort of leading to some of these numbers that we're seeing. Now, just to come back and add a couple of points to what Prashant was saying, this issue with the broader market. Now, yesterday, by the way, even in the SME segment, there was a fair amount of selling. If you look at the top volume trades on the SME platforms, on the NSE or the BSE, you'll find lots of red on the screen there. The market is taking note of the fact that the regulator is watching, and we put this out yesterday after our discussions with the SEBI chair. I just want to reiterate that. What is SEBI saying? SEBI is saying they have received market feedback of possible price manipulation in not just the IPOs, the pre-IPO stage, but also the post-listing and the trading stage. And SEBI is investigating and trying to gather more evidence on this. So perhaps there could be more action coming. And now that has started showing up in the caution we're seeing in the SME market. And typically dominoes are connected, right? A set of investors who've been going ahead and dabbling in SME, if they start getting some kind of margin pressure or losses in that segment, then is that linked to what's happening in the small cap market? That's a question to ask as we go forward. Prashant's already mentioned the distance from the peak. The peak was hit on the 7th of February. So in a month, the small cap index has lost about 8%. Now, there is a distinction being made in mid caps and small caps as well. Mid caps, the fall is a lot lesser. It's just about 3%. But we have to remember that mid caps is a small universe, just 150 stocks where a lot of mutual funds are piling up. Speaking of mutual funds, just keep in mind that the result of these stress tests is going to come out on Friday. So there is some nervousness and anticipation as to what happens once we know the extent of stress and what are these tests actually checking. Basically, to cut a long story short, they're checking how quickly can small and mid-cap funds liquidate their portfolios. We'll get that answer by the end of trade on Friday, and I think the market will take a couple of days to digest that. But until then, my sense is volatility is going to be the name of the game in the broader markets, Nigel.
Well, that's right. Two highlights with regard to yesterday's trading session. One was that, in fact, we ended at the low point of the day. And the second point was there was big pain in the broader markets. That was about yesterday. But for today, the three big factors that I'm looking at in terms of approaching the trade, I think the large caps, they continue to get preference in comparison to the broader market. So that's going to be point number one. The second factor will be that you have, the Nifty Financial Services weekly expiry that plays out. So that's going to be another, mover, particularly in the second half of trade. And the third factor is the Nifty has support at around 22,000 odd mark. That's the ballpark number. You don't want it to break that level. How are the FI is positioned? Well, they're still net short, but not too much. Not too big move in terms of open interest move yesterday. So you have them net short with close to around 59% of their positions on the short side. In absolute terms, that's around 35,000 contracts. So they're not aggressively net short. We always tell you that when they're aggressively net short, actually that gives you a glimmer of hope because they could be forced to cover out. That's about the FI positioning. What about the options data? 22,500 call, 22,400 call. Between them, 70 lakh shares getting added there. The bears feel that they've got this covered at around 22,550 to around 22,600. That's the rough range out there. And the PCR, even after this aggressive call writing, it's still holding at around 0.9. We've seen in the past that once the PCR comes down to around 0.65 to 0.7, that's when we see a bit of a bounce. So it's still got some distance away from those current levels. The levels that I'm looking at on the Nifty, as I said earlier, crucial support, near-term level you're looking at on the downside, and resistance at around 22,560, because 22,500 call has a fair bit of open interest. The premium is around 60 rupees. So that's why I'm bringing that up for you on the screen. Two big stocks that I'm looking at. One is ITC, because you have British American Tobacco that could possibly looking at selling some stake. The stock ended lower yesterday. It has a weight of close to around 4% on the index. So that could be one stock that will be a little under the weather for the next few days. Point number one. Point number two is, in times of trouble, the bulls have looked to Reliance Industries. And that's the one that comes in there and plays a blinder, so to call it in cricketing parlance. That is 10% on the index. And that's been the go-to stock. So Reliance Industries is one stock I'll look at, particularly if we trend a little bit lower. And the Nifty bank, you don't want it to break this crucial technical level of around the 20-day MA. So for starters, we're going to start in the green, but let's see how we trend from there. Large caps, they'll get preference in comparison to the mid and the small caps, as we saw yesterday as well.
Okay, all right, Nigel, thanks very much for all the important cues over there. Let's get started then. We have the equity call of the morning coming in. This is from Rupal Agrawal of Bernstein, who says there's growing investor consensus about a range-bound market till elections due to lack of catalysts. However, she says post-elections, the view seems to be divergent. She says some investors believe that the market could see another leg up, while others believe there could be some pullback led by some longer-term reforms, which might not be great for the market in the near term. She adds that most investors are struggling to find opportunities where there is both growth and valuation comfort, and this has been a key reason for no aggressive profit-taking in the winning sectors or stocks.
All right, let's get you some money market views now. This is Abhishek Goenka of India Forex and Asset Management, who says expectation of Fed rate cuts got revived post-Fed Chair Powell's testimony and an underwhelming US February jobs report. He says the market is pricing in a 70% probability of at least a 25 basis point cut by the Fed by June. He says US February CPI today and retail sales tomorrow will be key data points ahead of the Fed meeting next week. He adds US yields have come off across the curve and the dollar has weakened over the past few sessions. He continues to expect the dollar to trade with a weakening bias, adding the USD-INR pair has come off, tracking broad dollar weakness, and expects the pair to trade in a range of between 82.5 to 83.2 to a dollar with a downward bias.
On bonds, Vishal Goenka of India Bonds says that all eyes are on the CPI numbers due today evening, with consensus at about 5.05%. He says US monthly CPI data is also expected today, with the expectation of a 3.1% and a 3.7% ex-food and energy print. He says bond markets have seen yields grind tighter last week, with long-end government bonds at levels seen in June last year. He adds that markets should see resistance at 7% level for the 10-year benchmark bond yield and expects it to trade in a range of 7 to 7.05% for today.
We'll give you a broad trade setup. Let's get stock specific and let's run you through the stocks that we'll be tracking for you in our special top 10 segment. We're looking at hospital stocks, AB Capital, RVNL, United Beauties, HIL, Pitti Engineering and Oro Pharma. All of them will be reacting to positive news flow, while on the flip side, you have ITC, KFIN and tire companies that will be reacting to negative news flow.